So today we are diving into this exciting world of investing. First off, why is investing so important? Investing allows your money to grow over time, helping you build wealth and achieve financial security. Unlike saving, investing offers the potential for higher returns, which can help you reach your financial goals faster. Alright, let's break down the basics of investing and some smart strategies to help you get started. First, understand the basics of investing. Before you start investing, it's crucial to understand the basics. Investing involves buying assets like stocks, bonds, real estate with the expectation that they will increase in value over time. The key is to diversify your investments to spread risk and increase the potential returns. Second, set clear financial goals. Setting clear financial goals gives you a target to aim for, whether it's saving for retirement, buying a home, or funding your child's education. Having specific goals will guide your investment strategy. For instance, if you want to retire in 20 years with $1 million, you can use an investment calculator to determine how much you need to save and invest each month. There are great tools online like NerdWallet's retirement calculator that can help. Third, start with low-cost index funds. One of the best ways to start investing is through low-cost index funds. These funds track the performance of a market index like the S&P 500 and offer broad diversification at a low cost. They're a great option for beginners because they're easy to understand and manage. So here's a tip. Look for index funds with low expense ratios to maximize your returns. For example, Vanguard and Fidelity offer some of the lowest cost index funds available. Fourth, diversify your portfolio. Diversification is the key to reducing the risk and improving the returns. This means spreading your investments across different asset classes such as stocks, bonds, and real estate. By diversifying, you protect yourself against the volatility of any single investment. Fifth one, automate your investments. Automating your investments can make the process easier and more consistent. Set up automatic contributions to your investment accounts to ensure you're regularly investing without having to think about it. This strategy, known as dollar cost averaging, helps you buy more shares when prices are low and fewer shares when prices are high. Here's an example. If you set up an automatic monthly contribution of, let's say, $200 to an index fund, you'll be investing consistently over time, taking advantage of market fluctuations. Platforms like Betterment and Wealthfront make automation simple and effective. Sixth, rebalance your portfolio regularly. Over time, the value of your investments will change, potentially altering your desired asset allocation. Rebalancing your portfolio means adjusting your investments to maintain your original allocation. This helps you manage risk and stay on track with your financial goals. Review your portfolio at least once a year and make adjustments as needed. Many robo-advisors like Wealthfront offer automatic rebalancing features. That is great. Seventh, stay informed and keep learning. The investment world is constantly changing, so it's important to stay informed and keep learning. Follow financial news, read books, and take courses to improve your investment knowledge. The more you know, the better decisions you can make. So here's a question for you. What sources do you use to stay informed about investing? Share your favorite websites, books, or courses in the comments. I personally enjoying following CNBC and reading books like Rich Dad, Poor Dad by Robert Kiyosaki. So, investing can seem intimidating at first, but with the right knowledge and strategies, you can build wealth and secure your financial future. Start with small steps, stay consistent, and keep learning. If you found this video helpful, give it a thumbs up and subscribe to our channel for more tips on investing and managing your finances. Let us know in the comments if you have any questions about investing or share your own tips and experiences. See you next time.